Hey traders, welcome to Charts and Coffee. First episode of 2022. Great to see everybody. Happy New Year. Hope everyone had a wonderful weekend, rested up. Shout out to everyone who wanted to start some new exercise or nutrition and practice and decided to wait till Monday. uh, Great to see everybody. I'm looking forward to this year, not only with Charts and Coffee, but with the Mastery and the Options Room and the Futures Room, and really looking forward to everything that the year holds, including some trades. So without further ado, let's just get into it. Let's start off with the economic calendar, of course. Taking a look at in terms of today. We have bank holidays. So really the trading year, as far as I'm concerned, really doesn't start until tomorrow. Take a look. Canadian bank holiday. Well, we're coming out of a UK bank holiday, so we already have less participation going into the US Open. Then we have the basically North American bank holiday, Canada and the US. Funny enough, we still have some data being released, manufacturing PMI, construction spending. So just heads up for that 9:45 and 10 a.m. hot zone. So we're going to have a lower liquidity begin to the week. That gives us all an extra day to build our watch list, to focus on what we're going to do when the market's really sort of open tomorrow. So tomorrow we end up with ISM manufacturing numbers, JOLTS numbers. So pretty big data dump tomorrow. ADP FOMC meeting minutes on Wednesday, going into Thursday's ISM services PMI. Not quite as impactful as the manufacturing PMI, but still one to watch. And then, once we have ADP on Wednesday, that is the countdown to non-farm on Jan 7. So we've got a pretty important week as we kick off this new year. So with that being said, let's go ahead and jump into the questions. First one. Oh, I can already tell I'm going to like this question a lot. Happy New Year. Do I prefer weighted or non-weighted ETFs to trade? So for those of you that don't know what weighted or means, it means that there's a high concentration of just a handful of names. Well, you know what? Even better, I'll show you. Because a lot of folks don't know what that actually looks like. So let's go take a look at the S&P. This would apply to SPX, SPY, S&P futures, the options on all of the above. Take a look. This is what high concentration looks like. We know there's 500 stocks in the S&P 500, right? This is the first top 15. Look at the top 5. 6, 6, 3, 2. Out of 500 stocks, think about it, 500 names. Look at the fact that you have, let me do this here. I'm trying to get my writing tools. There we go. Look at the fact that you have just 5 names here. Look at the percentage that just those 5 names have in an index of 500. So you have 5 of 500. Look at the concentration of weighting. You are eating your breakfast really loud today, little man. All right, so that's the cat having his, I don't know, can you see that? That's the cat having his breakfast back there. All right, so this is what high concentration means. A very few number of stocks have a disproportionate weighting. Now, I prefer high concentration weighting because Apple, Microsoft, Amazon, Google, Tesla, Facebook, Google, NVIDIA, they're going to have a disproportionate influence on why this is going to move. So if I have to watch less, if I have to watch fewer stocks to understand why a sector or an index are going to move, that just makes my job easier. So not only do I prefer it, but I think in this world of high concentration weighting affecting S&P, NASDAQ, Dow, and most of the sectors that are heavily weighted with them, Equal balanced is just a fundamental misunderstanding of why the markets move. You can choose to invest in equal balance or more balanced. I have some of those via Vanguard. Those are longer term portfolio holdings, but as a trader, focusing on the equal balance, it's a fundamental misunderstanding of how the markets move in this ETF influenced era. So thanks for the question. And definitely weighted for sure. Happy New Year. What do I think of GDX? All right, GDX. So before GDX comes gold. Before I get even to what, if anything, I want to do with the miners, I need to ask myself, do I have clarity on the underlying? And the underlying here is not the individual stocks within the GDX. The underlying here is gold. So if I don't have a great read on gold, it's not trending, or if it's not at the upper or lower overbought or oversold edge of the chop. This one is at the upper edge, by the way. If you didn't check this video out, and I know it was a sort of a holiday weekend, it was New Year's weekend. If you didn't check out the free video from Friday. It's the only one there. You can't miss it. And I talked specifically about crude oil for those of you that are curious about crude. But I talked about how I have used the slow stochastic with a unique setting for a number of decades. It's an unusual thing to use the slow stochastic anyway. And then when you lengthen out the way that I do, and I share all those settings in the free video if you want to know. And because we are coming into the year with a lot of choppy indices, choppy sectors, choppy commodities, uh, let the strategy be dictated by the structure. Structure always dictates strategy. So if we're in chop, that's going to affect what indicators we're going to use and ultimately the strategy that we're going to deploy. So with GDX, it's one extra step, which is unless I like the read on gold, it's going to be hard to make a play on GDX. Gold is at an overbought level. Thank you, Darvis. Thank you, Yellow JT Multi. Thank you, Overbought Stochastic. If you like that stochastic, I explain how to do it. You can throw this on any indicator, or you can throw this indicator on any platform that I think of. And trying to think of one that doesn't have a slow stochastic anymore. Slow stochastics were not sort of always around. You can get a regular stochastic, but not a slow. But anyways, check that out. And I think you'll see why I'm going to pause on gold and why we are topping out and likely heading maybe a little bit lower, going forward. And maybe that sets up an oversold buy. And then that in turn would potentially set up an oversold buy in miners. All right, next up, should we be careful of reversals or patterns? Look, there are tendencies, I'm with you, but let's just wait to see if patterns occur. And I don't want to ever generalize because the truth of the matter is there are a number of places that have trends, pretty good ones. And there are a number of places, mostly at the broader level, the indices that do not have trends, or they're just barely getting back to trending, or they're choppy, like the Dow and the Nasdaq. By the way, the S&P is not, but we know healthcare is in fuego. We know financials are not, but we know tech is, right? So the reason I'm showing you this is contrast is because it just depends on, there's no way to answer that broadly. Let's look at it individually from sector to sector, from index to index, stock to stock. That's the environment we're in. The idea that that the rising tide lifts all boats. Sometimes that's true to varying degrees, but an outgoing tide is not going to drop all boats in an environment like we are right now. So again, we have to be very specific about the corner of the market we're focusing on, bullishly or bearishly. Okay. All right. Next up is, bear with me. Hello, David. Can I go over SGG? Sure. Let us know if there's a significance to the gap between the bid and ask Well, I mean, the significance between both tackle the easy part first. The significance between the bid and ask before the open is, well, it's not liquid. So you're talking about the Bloomberg Sugar Subindex Total Return. What's the volume in the SGG to begin with? So is it liquid? I don't believe it's terribly liquid. I don't believe this is a terribly liquid market. Number one. Number two, it's 9/11, right? Right now it's 9/11 a.m. Eastern. So if I've got something like this that's going to behave like a stock, I'm not going to see any reasonable, I'm not going to see any normal volume until after 9:30, 9:30 going forward. So then we'll see if the bid ask tightens up. But pre-market wide bid ask, I'd say that's pretty normal. Interesting look at the 200, by the way, David, on this symbol of yours. I like the way we've been bouncing off the 200. Very cool look. Let me show you a couple other things. First of all, nice support, Darvas signal, Darvas signal. What else do we have? I love, love, love this 200 propulsion swooping in here. So there's your 200 propulsion. Fantastic. And then you have the only part of this that's tricky. I shouldn't say only. Structurally, this is kind of looking bearish. So don't give this too much latitude. If we break the 200, remember we are looking slightly bearish, but I would also look at sugar. If you're looking at SGG, I would also take a look at sugar because this is going to roughly go where sugar is going to go. The SB futures contract. All right. Next up is, I'm afraid that any jump up could be a fake out. I think, Jim, today specifically, like I said, we have a bank holiday in North America, a bank holiday in Europe and UK. So definitely less than normal participation. Low participation means low attention, right? Low attention as well. So we don't have as many eyes on the market. And yeah, I would just be cautious today because of that. Not because it's New Year necessarily, not because it's Monday necessarily, but because of the low participation. All right, next up is what is the news concerning Turkish lira? Not a clue, Al. Not a clue. I don't follow it. Yeah, and I didn't choose your question to say I don't know. I chose your question to remind everybody. Anytime we're trading an exotic currency, and the lira is one of them. I get questions about the lira. I get questions about the dinar. I get questions about all these exotic currencies, and there's been a really interesting land grab out there. And this is why I wanted to, at least tackle the question, Alan. Thank you for it. Exotic currencies have always, being a forex trader for over 2 decades now, I can tell you this: exotic currencies have always had this wildly speculative nature about them because you can spend $100 and buy 30 million, notional value of these exotics. Um, so there's majors, there's minors, there's exotics. And so when you are looking at exotics in 2021, 2022, it's even been ratcheted up more because a lot of traders are viewing this as sort of, and I'm not saying that's what you're doing at all, but I'm letting you know the psychology out there. A lot of traders are viewing this as sort of a crypto like, what's the next Dogecoin? What's that next coin going to the moon? And there's sort of that psychology that's been playing out, not specifically in the lira, but just in general. There's an interesting psychology that's been playing out in currencies where you have this sort of idea that you're going to grab that next um, big currency, and you're going to be able to benefit from. Let me see if I can pull one of this up. It should be TRYJPY. So please be careful. They're insanely illiquid. They're very, very volatile. Their central banks, don't project what they're going to do. Just be careful. But as far as the news, I really don't follow these. I think they're just oftentimes very risky plays, very, very speculative. And now with, again, it has almost a crypto kind of thinking where someone's going to find that next minor coin that's going to, 10x, 100x in value. So, but I personally have no idea what's going on with the lira. I don't track it at all. I'll focus on euro, which has been great. US dollar, Canadian dollar, Australian dollar, New Zealand dollar, Japanese yen, British pound. I'll focus on mostly those majors and minors. All right. What is my opinion of Western Digital Corp? So if structure dictates strategy, it just went to green over green. Now, this is so important. I do have the stochastic here, but does the stochastic apply to green over green? No. Does the stochastic apply to red over red? No. You want to focus the right tool in the right environment. Do not look at oscillators like a stochastic in a trending market. It doesn't know what to do with higher highs, and it's going to continue to think, oh, higher highs, overbought. Oh, lower lows, oversold. So be careful because they don't have any other way in which to interpret the price action. So in this case, I like the idea that we're north of the 200 propulsion. We've just freshly gone green over green, but it's vulnerable. It's vulnerable, but I do like potentially the long side of this one, Jeffrey. Yeah, it could be interesting on a pullback. Just be cautious because it's so freshly bullish. All right, next up is Google looking for a new year investment. Gosh, lengthen the time frame, wait for a pullback. Ron, that's really the way I look at it. Lengthen the time frame, jump out to a weekly. I don't go to monthlies, but I don't usually invest on a daily other than maybe for the fine timing of a purchase. But length of the time frame, wait for a dip. It's a trending market. I do like Google. I just need a better price from which to buy it. That's the way I look at it. And a lot of traders will presume that timing is not a part of investing, that the price doesn't matter if your time frame is long enough. And we just know that's not true. You think Warren Buffett doesn't look at the price of something before he adds it, Charlie either. So this idea that you can't merge a little bit of what you know as a trader with a longer time horizon and a more patient approach to how long you'll hold it, right? Hence longer time horizon, and how you'll quote unquote add to it, build a position. I think that there's a lot more in common with trading and investing than maybe a lot of traders embrace. To me, I think there is there's a little bit of a mesh between them. Price matters to me, even when I'm investing, but I don't want a trading short-term time horizon or approach. So I hope that makes sense. All right, moving on. Michael's asking, any thoughts on seasonals? Michael, I covered seasonals a lot throughout December. So for those of you that have any questions about seasonals, I haven't changed any of that since last week. So please do take a look at the Simpler Trading YouTube channel, and you will see the videos that I did. I think December chop suey, is Santa done? Almost every one of these have some, there's tis the season to be seasonal. So almost every one of these rebalancing act, I'd say 3/4 of the videos I did through December were how I look at the seasonals in December. As far as seasonals into January, I'm not as interested, quite frankly. There is a tendency for there to be a pullback with the window undressing, but I've addressed all those. So check it out. And if you have any questions, come on back to our next episode and I'll be happy to fill in the blanks. All right, any thoughts that 10 and 30 year? I would like to get short, frankly, both. And then the question becomes, what's the setup? And that's what is eluding, I think, me right now in terms of being able to get a nice long yield short, in this case, a 10-year ZN, 30-year ZB, getting a nice short setup. They're rather aggro. The structure is not great. I mean, you need a Dramamine just to to be in ZB right now, the 30-year. So I know what direction I want to trade them in. It's structure before strategy, south of the 200 propulsion, but I just don't have a clean setup. So my thought is a little bit of frustration, but I know what I want to set up. So thank you for the question. I'm using Walmart as an indicator for retail. You're currently scalping the spot Forex market. Oh, cool. Cool. How about just looking at retail as an indicator for retail, my friend? I would just keep an eye on XRT. Remember, Walmart's not going to move necessarily with retail. Be aware of if you're looking at a certain group of stocks and they have an ETF that has liquidity like XRT, you want to know who's moving together. Now, if that's working for you, Mark, awesome. But just be careful because Walmart is probably every bit the reflection of what might be going on XLP than XRT, right? So if you look at, and I love how you're thinking. You're thinking about correlation and how can I get that edge on some clarity. I love it. So I'm just adding some more, hopefully some more nuance. When you look at Walmart, there's your retail right there, RTH, and then XLP, right? But RTH, it's 5.19%. So what you definitely want to do is keep an eye on the RTH, keep an eye on the stocks that Walmart's moving with. I don't necessarily subscribe to a leader laggard approach unless we're talking relative outperformance within a specific group that is tight, that has a cohesive uh, treatment in the market because of the ETF, because of passive investing. Jimmy, yeah, definitely go back. Any thoughts on UUP? Yeah, definitely take a look at the recent update I did on the dollar. You can check that out back at the YouTube channel. And a trade to take us into next year. I dive into the dollar in that one. So you'll definitely want to check that out. All right. I am out of time. Oh gosh, I'm over. So let me wrap up here. I will see you all tomorrow, same time, same station for our charts and coffee. And as always, again, Happy New Year. I hope everyone a happy, healthy, prosperous, awesome New Year. Thank you for being a part of the Charts and Coffee Caffeinate and Dominate crew. Be good to each other. I'll talk with you soon.